Well, a GameStop kind of rally is being seen in silver. The reason why I say GameStop is because it was last Thursday when we did see Reddit posts being circulated around how retail investors should perhaps consider buying silver mining stocks and ETFs related. And since then, in fact, for the last 3 consecutive trading sessions from Thursday to Monday, we have been seeing this continued frenzy in silver. There are retail investors chasing silver futures contract, and it is something that had caused the futures contract to rally close to $30 per ounce. In fact, it managed to cross that level on Monday's trading session. It was quite a nice rally that we have seen in the industrial and precious metal space. On Tuesday's session, however, we have seen that rally sort of slow down. This after the Chicago Mercantile Exchange, or the CME board, decided to hike the margin maintenance by 17.9%. This would essentially, to put it in simple terms, make it a little more expensive for retail investors to then trade in silver futures contracts. Now, remember that, when it comes to silver, this has been a metal that we've been long talking about how it's undervalued compared to gold, so on and so forth, and how, the very talked about silver gold ratio as well is something, that is still got more legs to run up. Of course, many say that it's very hard to see how and where this will go, because it's all about the momentum. Right now, there's a lot of momentum behind it, and hence hence retail investors as well did decide to get on board, because nobody wanted to miss that GameStop kind of rally. However, now with the CME hiking the maintenance margins, it definitely has changed things quite a bit. But the tweak, in fact, in this maintenance margin could have an impact that could take silver back to maybe $26 per ounce. But the thing is, silver is being increasingly viewed as an investment metal of sorts. We have some data from the largest silver-backed ETF, which is showing its silver holdings jumping by a record 37 million shares from Thursday to Friday alone, which each represents an ounce of silver. So that in itself shows the kind of frenzy that's there behind the industrial metal. Now, experts caution that gold's relatively subdued performance in turn suggests that silver's rally as well may not last long enough, because an ounce of gold currently buys 63.2 ounces of silver. This is the silver gold ratio I was talking about. Now compare this with 73.3 prior to this rally on the 25th of January. Now let's talk about what the impact, of course, is from back home as well in India. On Monday, there were important announcements with respect to the union budget on how the duty has been cut. Yes, there has been a cess that has been added, but the duty has been cut from 12.5% to 7.5%. You add a duty on it of 2.5%, so net it's a 10% import duty. Still, it's lower by 2.5%. On the MCX, we saw an almost instantaneous reaction, on the down for gold prices. So that was that adjustment immediately happened of 7.5%. But yeah, that's essentially the story for precious metals. If we have to look at it from an Indian consumer perspective back home, I think buying gold and silver because of this custom duty cut will become a little cheaper.